Hello and welcome to Options Guy TV. My name is Brian Overby. I'm the author of the Options Playbook, and I'll be your host here for about the next 20 minutes, I guess, on Options Guy TV. So last week, we were highlighting the fact that we had a couple of questions because we do have a portfolio that's going on that of deep in the money call options. We added Netflix last week to our deep in the money call position. And then we also added a short call to FedEx. Now, it didn't fill on the show. So I want to go to the Tradier Pro paper trading platform, and I want to show that execution. So here's what we have. FedEx has made a bounce back. Just recently. So now we are profitable on our P&L at this point in time. And we sold this call. We sold the FedEx $335 call option. Has 21 days remaining until expiration. I'll put FedEx down here. And we'll get a quote real quick, and it's at 304. Oh, it's down today. It was up strong yesterday. So I guess we're giving everything back. But the market, market has bounced back too. So we're a little bit up in the SPX right now. We were down. The market was hurting, but now we're kind of bouncing back. 304 on FedEx. We sold. Oh yeah, we're up 20% on that. We're down 11% here. 335, 280. The market's at 304. So 30 points to get to the short strike, 21 days remaining until that expiration. We actually received $1 for it. So we did get a fairly decent fill. That's about a 10 delta, about a 10% chance of it. Oh, here's where the delta is right here. 0.09, 10 delta. That means there's about a 10% chance that it's going to get to that strike by that expiration. And we brought in $1. All right. So that's a solid trade. And I wouldn't mind doing that on Netflix either. Netflix, we still, they made a bigger offer for Warner Brothers, and that an all cash offer. Now, Netflix has been beaten up, I think, mainly because of this battle that they're having to try to purchase Warner Brothers. And they're worried about the total cost at the end. But the company has always been resilient. And I think that this is a buying opportunity. And that's what I said on the show. But we've already had earnings. And in the short term, I don't think in the short term, I don't anticipate anything to move that quickly. There's a lot of vol still in the options, and it has a lot to do, I think, with that merger. 1 second here. Oh, no. And because of that, I don't mind selling a call at this point in time against that position. Also, NVIDIA, we're down a little bit on, but I don't want to sell a call there because I think that stock is too volatile, if that makes sense. I only want to sell calls on positions where I feel fairly comfortable that we're not going to be assigned. If we're doing this, and this is legitly called a fig leaf, you got a longer term option against a shorter term option. So inside my book, we title it the fig leaf. And so that is the goal. I'm sorry, I'm a little distracted. I was trying to find the news on Netflix about their all cash offer, but I'm going to move on. Here we go. Let's go to Netflix, options grid, and Netflix. Let's get that order in. So we're going to go short term. We already had their earnings, or I wouldn't want to be selling a call against our long call position in Netflix if we had an earnings report that was pending. It's an $85 stock. So we're going to stick around 14 to 21 days. If I'm selling it because I own the underlying stock, I don't mind going out to 28, 35, 40 days. But in this instance, we're going to sacrifice premium to get a shorter expiration. So I'm going to look at the 14, see if we can get something decent for it. And if not, we're going to look at the 21. Market's at 85. Yeah, we go one standard deviation out of the money. We're at 57. We're just not getting quite enough premium. We're only trading at about a 30 ball. So that's probably the reason why. One standard deviation, we're getting 70 cents. And we're going to sacrifice. We're going to do this one. Here's the option contract we're going to look to do. We're going to sell the 92, which is at an 18 delta, which makes you a little nervous. But that's what we're going to sell to try to get a decent amount of premium. And so that kind of highlights how we did really well on our FedEx call, because we're all the way up here at like a 9 delta, pulling in $1. But that has a lot to do with the fact that it's a $300 underlying. So here we're going to less of an underlying. Did we do 2 of these? I think we did. We got come on. Why? There it is. Okay, I don't know why it wasn't showing me the position. Netflix 72. Yeah, we did 2 of these. So let's do 2 here. And then that will make up for the low dollar amount. So we're hitting the bid. 72, and close that one out. We're going to sell the 92, and we're going to sell it twice. All right, 58 cents at the mid. We'll put it in because it's paper trading. Let's try 55 and see if it will take that. And we'll send the order. So we're selling 2 of the 92 strike calls, which are 21 days out. We're going to pull in 55 cents. If we get 2 of them filled, we'll be pulling in $1.10 and sell the open limit. And it's open right now. So if we run into the orders, we take a peek at it, it's showing us there. Now we're going to make sure this fills before the end of the show. So we're at 53 by 58 with a limit of 55 in the middle. If we have to hit the bid, we have to hit the bid. Like I say, it's a paper trading app, so you don't get real fills like if you're in the market. It's a little harder to get those fills, actually. Portfolio options, great. Okay, so now next week we have Meta on Wednesday. And I'm going to set up a trade today. Meta is up quite a bit, a little bit more bullish than bearish. Recently in Meta, they've been worried about the fact that Meta basically wants to become an energy company. So they're trying to figure out how they are going to pay for all the power to run all the AI that they've spent so much money on. So here, let's grab this precipitous drop right here, this gap down to 680. We came all the way down. We have, let's go, I'll keep it there. Here's a 200-day. Here's the 50-day. Here's the 20-day. Okay. So we blew through the 50 and are strong. I think the next stopping point might be the 20-day. But now, if we get that catalyst where we might get that earnings report, and this is a might, right? It's no idea what could happen after earnings. If they say they're spending more money, they might get beaten up. At this point in time with Meta, they're aggressively going after their AI strategy. So 680 is an inflection point. If we can break through that, we need to fill this gap all the way back up. The market wants to fill the gap usually. You could say maybe a stopping point is right here, 704. Blow above the 200-day moving average, but the high end 740 on this scenario. And if we zoom all the way out, I mean, all the way back to where we kind of had this double top was at 790, all the way back to get back to the most recent highs in Meta. I don't mind the under. I don't mind doing Meta at this point. So I'm going to actually just do a long call spread heading into this position. So We're not going to get fancy with a butterfly. Maybe on the day of, we'll suggest a butterfly if you want to wait for it. So they're going to be announcing on a Wednesday, so we'll put the earnings play, the short-term earnings play on Wednesday. But I'm going to do a little bit longer-term play here in Meta. And it's going to be expensive. It's going to be expensive. We're going to go out 42 days, out to the March 6th expiration, and we see how pricey these option contracts are. We're going to go a little bit in the money. We're going to buy the 655. And at the same time, this is going to be a lot more expensive trade than I usually talk about on my show. And then we're going to go quite a bit out of the money. We're going to give this a little room to run. Actually, let's see what the at the money straddle is right now. 660. So it's 22. We'll call it 44 points. Yeah, that's a good guess. 44 points is the most at the money. 44. So we're talking about after earnings, the anticipated move would be about 700. 705 to be a little bit more accurate. And get 18 for that. Let's go a little bit further out of money. Let's sell the 720. $24, $2,442 to put the trade on. But more importantly, it means the break even. Now realize we got 42 days until that expiration date. Extrinsic value, we're selling we're buying $32 worth of time. We're selling $14 worth of time. And we're going out to 42 days. Trading at 40, historical vol is 40, and IV is 38 that far out. 60 in the front month. That's not horrible. Okay. I don't mind it. It's just expensive. It's not what I would normally talk about on the show because, $2,440 is a little bit higher than the risk that I mentioned on our one lot butterflies, but I'm sure a lot of people do a lot more than one lot. And as I always have to stipulate, this isn't meant to be a recommendation, but we're going to look at Meta getting a little bit more long-term bullish on it based off of, maybe a buying opportunity because the stock got beaten up. They got to have the energy to run their AI strategy. So if you believe in Zuckerberg and his outlook for his company, nothing fundamentally has changed, and kind of expect a decent earnings report heading into Wednesday. So there's a break even. So let me go and toss this into the what if calculator. And here's our strategy. We're going to buy the March 6th expiration, 655 strike call, and at the same time sell one of the 720 strike calls. We're going to pay $2,462 for it. And you know what? I'll send this. That's our midpoint. Let's see if we can buy it at 25. And then we can track it inside our portfolio. All right. So we'll send that. That is going to be our trade. You got to be bullish on Meta to do this trade. We're going to hope that the earnings catalyst can catapult us above the 680 level. That's obvious. That's a strong move, but it's today it's up $13. So a 20-point move isn't a horrible thing. The expected move after earnings is $44. So we can easily see this stock getting in that range. And then it gets interesting to see if we could fill the gap of this precipitous fall in Meta at that point in time, and a real strong momentum. Yeah, I don't mind this trade going into earnings, or obviously I once suggested it. Let's go to the orders and let's make sure that this trade gets filled. Okay, we filled on Meta. We filled at $25. We're going to take this order and we'll just click. Oh, there it is. There's the cancel button. Cancel that order. All right, and let's resubmit this. Send trade again. Why can't we fill on that? 55, 53. I guess we'll just hit 53. Let's hit the bid. I wouldn't suggest this in my normal trading. I would work the order a little bit more, but we just want to make sure that that trade gets filled. So paper trades. We executed the FedEx short call. We didn't get it executed on the show the last time. So we now have a fig leaf on in FedEx. We executed Netflix last week. We got our long call option on. And this week, we're actually selling some premium against it. We're going to sell the 92 strike call going out to the February 13th date. So very short-term expiration. And we got that filled. And now we're going to get long in Meta. And we're going to look at a long call spread heading into the earnings date. Now, if there is some profitability or if the market goes against us, there's potential to buy to close the 720 call and roll down, bring in something to offset our risk. So we'll watch that, see what happens over the next couple of days. I guess Monday would be our best day to make an adjustment. Yeah, we could even do it Wednesday because we got the show on Wednesday. So we may adjust the trade heading into it. If we got a good profit on over the next few days too, if that momentum to the upside continues, we may just close the trade. We'll see where we're at. But that's going to be the approach on Meta. And then on Wednesday, we'll look at probably doing a butterfly. You got all day Wednesday. Well, Wednesday's going to be the trading, the announcements. You got all day Thursday, all day Friday. Like ideally, you would like this to be on Thursday to put the trade on. And we do have a lot happening on Thursday too. So you have MasterCard, which should be interesting on Thursday morning. You have Apple after the close on Thursday evening. We got Visa that's going to be announcing. Got the NASDAQ that's going to be announcing Thursday morning. NASDAQ has done really well. So has the CBOE, actually. They've done well, too, with that underlying stock. All right. That's it. Short and sweet. We'll see you Monday for the next edition of Options Guy TV. Yeah, hold on to the Meta position and we'll look at doing a little bit more earnings trades. We might do something out of Apple too. So on Wednesday, we might do a couple of trades. All right. So that's it for this edition of Options Guy TV. See you Monday, 11 a.m. Eastern time for the next edition. Click subscribe, ring the bell, do all the fun things so you get all the alerts for Options Guy TV. Thanks for stopping in.
You know how the financial world goes. Here comes the buzzkill. Please make sure to take some time to read this boring disclaimer. We will owe you one.